we spent a lot of time talking about what is going on from a macroeconomic perspective, as well as potential policy errors. But I think this is a great chance to really talk about what is fundamentally going on in corporations as we're in earnings season. So what have we learned so far? The big banks and most of the major credit card companies have reported, and credit quality has actually been better than expected. So consumers have taken on quite a bit more debt in the last few years, but we're not seeing really any major cracks yet. So that's very encouraging. You are seeing loan growth start to expand. So banks have been relatively conservative on making loans in general, but you are starting to see a pickup in loan growth, which is healthy for the economy as well. The other thing that's really interesting is to look at companies that have missed earnings and the stocks have retreated, and mainly focusing on companies that are starting to utilize a lot of the newer technologies. So what comes to mind are last week was Fiserv, Chipotle, and Texas Instruments. They're all very large, well-established companies, and they all have exposure either to AI, to crypto and stable coins, or to robotics in the case of Chipotle. And they're all companies that are starting to utilize technology in different ways. And as we know, growth is never linear. So in each of those situations, either the adoption to the business model has been slower than expected, or there has been a postponement in the adoption of the technology. And what tends to happen in environments like this, where the market's performing pretty well, is expectations rise, and a company that maybe is normally trading at 12 times earnings might be trading at 14 times earnings, because there's the expectation that earnings are going to pick up and operating margins are going to increase, profitability is going to increase. So the multiple that somebody is willing to pay on those future earnings has come up. And in those situations, if you have a company where the adoption is slower than expected or is postponed, then the stock will retreat and go back to like the 12 times multiple, the more normal multiple, and it won't discount anymore. For investors aren't willing to discount for that future growth. And that can create opportunities. But we're definitely seeing that happen in the market. And then it'll be interesting to see a lot of the leaders in some of those technologies that we've talked about, in particular AI. You've seen NVIDIA continue to hit record highs. You've seen Microsoft do exceptionally well. Those stocks are definitely trading at exceptionally high multiples. So it'll be interesting as we get into the days they report to see if they are exceeding expectations, which is really what the market's looking for. Thank you so much.